Good morning, everyone. London session live stream. London session live stream trading a small account with my own funds. And that small account is going to be with, as I have recently told you guys, it's going to be with Fusion Markets. So for now, I'm going to be trading a $1,000 account with Fusion Markets. And we're going to see where I can take this account. And this is going to be the London session live stream trading. And then during the New York session live stream, I'm going to be trading the prop firm account at Neoma. By the way, if you guys want to purchase an account from Neoma Markets, from Neoma Funding, actually, you can use code RBV. You're going to get a 30% lifetime discount for any challenge that you get. And also, if you're going to use new 40 for your first purchase, you can get 40% off any challenge account, but only for your first purchase. The link to the broker that I'm going to be using today and from now on for the London live streams, Fusion Markets, you can find that in the link in the description. I've chosen this, like I said yesterday, because they have very good spreads, especially on gold. Right now, the spread on gold is 4 points. So it's less than 1 pip, less than half a pip, which is great. Also, their commissions are small, $2.25 per side, per standard lot, which is fantastic. And this is an Australian broker, regulated, so you can definitely trust it. All right, now I'm going to mute myself. But before doing that, because I'm eating, obviously, because I just came from the gym. But before muting myself, I want to go through whatever happened yesterday. Like, what a thing happened yesterday that after I took out my stop loss on that trade that I took on the London session, it actually then went up, which, yeah, sad, but it is what it is. Now, I want to take a look on the daily chart and see if something has changed since yesterday, when I was saying that we might actually be seeing price reaching higher towards the 4-hour bearish fair value gap, which is around 34.05. Now, as far as I can see, on the daily, nothing really changed. We did seem to have some sort of, what other people will call maybe like a rejection candle, like yesterday's daily candle. But I don't know what to say. We'll see. Bottom line is the following: you have to keep in mind that this week we have CPI news, and obviously, usually, the days before CPI, like that week when we have the CPI news, the 2 days before CPI are usually either consolidating markets or prices all over the place. It goes up, it goes down, it goes up, it goes down. On the smaller time frames, it might seem that it's trending in a certain direction or that it's reversing, but actually on the slightly bigger time frames, you're going to see that it's just consolidating, which, for example, if I move to the to the 1 hour chart. So today's Tuesday, right? Today's Tuesday. Yesterday was Monday. Starting from, Sunday open around 6 p.m., which is when the week opened. You're going to see that the market is just consolidating. Like, it created a ceiling. It created a floor over here, seemed to be breaking that, and then consolidating again. And right now it seems to be breaking that to the upside. So like I said, it's either going to seem as if it's consolidating or it's just going to be all over the place. Imagine the amount of people that were looking at this market consolidation, waiting for price to move down, to break out of it, either up or down. And right now we have a lot of breakout traders that are actually in short sells, and guess where they have their stop loss? I have a big hunch that it is slightly above here. And then we also have a lot of market participants who are probably in long positions, and I'm talking mostly about swing traders and obviously institutions that are likely thinking, well, it was consolidating, right now it broke to the upside, so we're going to ride the market and it's going to go up, and then it might actually reach a certain level which is going to make them trust their buying positions even more, and then make them add more, and then who knows, maybe the price is just going to collapse. Anyway, bottom line is that I don't want to make assumptions. I always want to keep an open mind about what might happen, and the truth is that anything might happen. What I know for sure at this moment is that there's definitely sell side here, 30 to 45, and there is a reason for price to move up into 34.05, the 4-hour bearish fair value gap, which is around here. And who knows, we're going to see whether it's going to continue to move higher. Bottom line, like I was saying yesterday, is that if there is no imbalance, price will seek liquidity. So right now, again, we're seeing price moving up. This is the 4-hour chart. And if we're seeing price moving up, and to the left side, we can clearly see that there is no bearish fair value gap. Also in here, there's no bearish fair value gap that hasn't been rebalanced. Then it means that if price goes up and there is no imbalance to the left side, then it's probably headed towards liquidity. And right now, liquidity is above these highs, obviously above yesterday's high, above these highs over here, and then a little higher, which is going to be like an obstacle in between the level at which price is currently and the next area of liquidity, which is over here. We have that 4-hour bearish fair value gap, this one, which is basically like an obstacle in between price and reaching to that high, which is what? It's 34.40, 34.50. Okay, well, that being said, look at how bullish the previous 4-hour candle closed, which makes it a big chance that the next 4-hour candle is going to continue. Bullish. The 1 hour, 40 minutes until the 1-hour candle closes, and 10 minutes until the 30-minute candle closes. You know what I'm thinking? If price had a break, a retest, and then a follow through under yesterday's London and Asia session lows, which was also an SMT sell side area. If price closed under there, retested, and then it continued to move lower, you might have thought that, well, that was a break in market structure, right? And it's likely going to continue to move lower. Very true. However, if that would be the case, I don't really see why it's now running higher and closing back above this level that it broke to the downside previously. Like, I don't like that. It's like it broke out outside of a range. So think about it. This was the range. it broke out of it to the downside, and right now it's going back and closing back inside the range. And usually when that happens, then it's likely that the next draw on liquidity is going to be the upper side of that range. But anyway, we'll see. What else? What else? Let's mark the SMT divergences, right? Because that's where we sort of like, that's where I get my direction from. So obviously there is an SMT divergence here. Even though, you know what? This thing where gold makes equal lows, okay? And then silver makes lower low, that's not an actual divergence. The actual divergence would be if gold would make equal lows and then silver would make a higher low. Because this is the type of hidden divergence where you're actually hidden or extended, no, it's actually extended divergence. We're actually thinking that the reason why gold is creating relatively equal lows, or in other words, a support, is because it's showing signs of strength. The inability to create a lower low, so the inability to go lower, to break under that first low, and then, so that's a sign of strength. And then also silver is showing sign of strength by not being able to create a lower low, actually by creating a higher low, okay? So actually, this is not an SMT divergence, but where we do have a divergence is over here. Which this is like a bullish continuation SMT divergence, and which basically means that all this move that we've seen on yesterday was just a higher time frame bearish pullback. And there you go. Just to mitigate this breaker, this bullish breaker over here. Okay. So the expectancy of this thing to continue to move higher is pretty high. Okay guys, so I'm just gonna mute myself because I really want to continue eating because I'm just starving. So yeah, if something comes up, I'll just unmute myself and let you all know. All right, so some of you have some questions in the chat, so I'm just gonna answer them here. Someone asking if I am only taking one trade per day. I usually take 1 or 2 trades per day, per session. Until yesterday, I've only traded the New York session, but starting from yesterday, I'm gonna be trading London and New York session. So my goal is to take 1, maximum 2 trades per session. So if the first trade I take on the session is a win, I'm likely, like 99% of the time, I'm gonna stop trading that session. And if let's say the first trade of that session is a loss, then I'm gonna try to recover if I'm going to be seeing another opportunity, another setup forming. Obviously, if there is also enough time left within that session, within that kill zone, and if not, then it is what it is. I'm just gonna come back on the next session. And if we're talking about the New York session and there is no other next session, then I'm just gonna come back tomorrow. Also, someone asking what indicator I use to show the sessions, the square box at the bottom of the chart. So the boxes that you guys see here at the bottom of the chart, these are not sessions. That's an indicator which is called quarterly theory. It's made by a guy 2 degrees. That's how you're going to find it in the indicator list on TradingView. And it's basically just showing the slices of time divided into 4 sections of 6 hours each, starting from 6 p.m. And then each 6-hour slice of time, it's divided into another 4 slices of time, each having 1 hour and a half. And then you can also add like micro sessions, but I haven't added those. Oh, actually, I did add those. Every 1.5 hours, it's going to be divided into 4 slices of time of 22.5 minutes each, so 22.5 minutes. And it's basically Trader Day. I think you guys have probably heard about him. It's a guy who's trading SMT based on time. SMT based on time. And he has this thing, quarterly theory. If you guys use SMT, I strongly recommend that you go and check his content. He only has 1 video on YouTube, and he doesn't post that much on his social media. Not analysis, nothing like that. But there are a lot of other people who do that, who post stuff that, he talked about in his 1 single video that he has on YouTube. But yeah, if you want like a session indicator, which like a kill zone indicator, then it's this one, the one showing these boxes on the chart. These boxes, that's the kill zone indicator that I use. And the one that I use is, object tree. No, it's not that. I never know how to look at what indicators I have here. Is it with canvas, navigation, pane? Watermark, background, grid lines, whatever. Hold on. Okay. Indicators, titles, here it is. Okay. Lux Algo ICT Kill Zones Toolkit. That's how it's called. The indicator that shows the kill zones. And in this one, AGFX watermark, it's just showing this watermark. Fuck your mood, follow the plan, and pay the trader. So yeah, this is what I use. All right, so 10 minutes since the 30-minute candle closed, and it closed very bullish, which is nice. We like the fact that it closed bullish, me and myself, meaning me and myself, we like the fact that it closed bullish. And me and myself also like the fact that it created bullish fair value gap with SMT. And also me and myself like the fact that we created bullish fair value gaps. So just waiting. And if you guys are wondering what I'm waiting, obviously I'm waiting for a retest and a reject off of one of these fair value gaps. Obviously I have the retest and I also have the reject, which is this previous M5 candle that closed bullish. However, what I do not like about it is the fact that we also have an SMT divergence over here. This one. I don't like that, obviously. However, considering how bullish all right. $33.6309. $33.6309. A 2R would be, oh, what do you know? What a coincidence. Precisely at yesterday's high. Almost. Okay. Now, maybe you guys are wondering, why is my stop loss this wide? It's wide because that order block, this one, hasn't been retested. Oh my God. This one. Oh, Jesus Lord. Hasn't been retested after the BISIs were created. And to avoid any risk of it being revisited and catching me off guard, I obviously want to avoid that. Also, if I'm looking at the 30-minute chart, and I'm just going to apply basic support and resistance concepts, obviously we created a support here. And so the chances of this next 30-minute candle continuing to push higher are definitely big enough. Maybe till around here. Anyway, we'll see. Okay. Well, if anything changes, I'll just unmute myself and comment. Till then, enjoy the music.
flower, violet green, lily of the valley on my knees. All the things I left behind, save this little place in my mind. I don't wanna lose you. It's too soon. I don't wanna lose you. It's too soon. Dandelions, rustling leaves, just like in my childhood dreams. You're as delicate as a leaf, you don't know what you mean to me. I don't wanna lose you. It's too soon. I don't wanna lose you. It's too
Okay guys, so what I'm gonna do right now, because price is breaking bullish candles, I'm gonna close half of my trade in a loss, and in case price will continue to move lower and eventually take out my stop loss, I'm just making sure that I am losing less than I've expected initially, or less than I not that I expected, or less than I initially agreed to lose, so to speak. Okay, so my loss, or my stop loss, was 58 pips. Okay, I've closed half of my trade at 38 pips in a loss, and right now the other half, if it's going to continue to move lower and eventually take me out, it's just going to ensure that I'm going to lose less money than I initially anticipated, than I initially wanted. Okay, so yeah, managing risk, something that I've learned from Raja Banks. So if right now price will continue to move lower and it's going to take me out, I'm going to lose, what's this? $58. Okay, $58. And I've already lost 38. Okay, so 38 plus 58 is just going to ensure that I'm going to lose a lot less than I would have initially anticipated, right? Don't look at this because it's just a transfer that I made, okay? It's fine. I didn't lose that amount. It's a transfer that I made to make sure that I'm just going to stick with $1,000 in the account and not more. Wow. I can even imagine right now all of you, oh my God, look, she's $1,000 in a loss. No. Okay. Yeah, it's probably gonna reach out for the other part of my stop loss. But like I said, initially from a loss of $115, because that's, so $115, that's how much my stop loss was previously. I've had a loss of 38. And if I'm gonna lose another 58, which is the stop loss of the remaining, that's gonna be a reduction of my stop loss of $20, okay? Reduction of my stop loss of $20, which is around 17%, I think. Anyway, between 15 and 20%. Less money risked or lost or whatever you want to say. Okay, let's just keep watching this thing. Okay, so stop loss taken, down $100 out of an initially 115, 100 something that it was initially sort of like planned. Okay. Okay, we still have some time left for the session, so I'm just going to keep on waiting.